Happy 4th of July, happy Friday, happy long weekend, happy end to the first half of 2026. We are halfway through. And wow, man. I need help. I need help. I need somebody to help me redo the website. I can do this. I've done it many times before. But I would need to shut down everything for a week because that's just the way my brain works. So anybody who can help with, rebuilding this site, I've already got a layout for what I want. Message me. I'll give you a free month. So the month in review, talking about the SPX credit spreads. We're not talking about the futures trading. We're not talking about single trade options. Not talking about any stock trades, strictly just the credit spreads. You got to remember, I was telling you, we're going to bottom. We kept looking for that 65.22 on the way down there back in March, looking for it. Looking for it. Talking about the ceasefire, Easter bunny bounce that's going to be coming. The pre-planned SPX dropped to 65.22, and we got it. Not only did we get it, but we got it pretty eloquently. And everything was going great. Everything was going fantastic. And then on April the 8th, they announced the ceasefire. Boom, here we go. And that's where I ran into trouble. And when I say I ran into trouble is I had already reached where I wanted to be as far as the chart goes. I'll pull up a chart here for you real quick. I had already reached up to where I wanted to be. I wanted to be up here into the 68.50, 68.75 zone. Everything looked great. Everything was fantastic. And then all of a sudden, it became the AI memory rally where everything just went absurd. You're looking at your typical Mag 7s. You're looking at your standard, indicators. And it wasn't about being bearish. Never was bearish. It was looking for failure. Constantly looking for failure. And when we got here into this April 17th, the OPEX going into around the end of April, things got actually a lot better. They got a lot better as far as me with the spreads. Had a little bit of trouble there after that ceasefire, then started to pick things up right there after OPEX. Boom, getting $4.50 credit, $3 credit, $3.50 credit. The standard default, kick the tires kind of credit spread trade are a lot of people going out and risking $4.50 to get 50 cents and cut that when they've got 25 cents. And I don't see that as an appropriate strategy, which is why I'll get 400%. I'll get 900%, like here example on the April 21 70.95, 70.90 call credit spread. We closed at 70.64. That's full credit, $4.50 credit on a 50-cent risk trade. It's 900%. And that's the way my eyes and my vision are for the trade. But at the same time, it's the accounting, the CPA background that I have for the math. I mean, the math makes sense. You could lose 50 cents, but if you lost 450, it's hard to make that up, getting 25 cents on your trades. But anyway, again, it looked good. And then in May, when the socks and the chips and memory started going ballistic, didn't work for me. 72.40, 72.35, we go to 72.59. I'm right, but I'm wrong. 72.60, 72.75, 65, 73.05, 7300. I'm right, but I'm way wrong because we got a plus 1% day. But these are examples on how I look for what I'm looking for. And I'll show you here, just in the chat room there on Friday. We're going into the final trading session of long weekend right before 4th of July. Everybody knew the history. We already knew what we were looking for when we went into the week. As I said, July 2 week preview. Green doesn't mean bullish. We're getting a green week. But yeah, as we came down into that, coming back on here, where are we? Friday. Like I shared there, 2.5 hours before the market opened, anything above 74.91 is going to burn your ass being blind bullish. 74.68, 74.57, those are your pivots below. Now this completely contradicts getting a green close for your pre-4th of July Thursday. However, like I shared, 75.35, 75.30, for all of those who wish to fuck around and find out, because it's the end of a week. You've had a great week already, but if you want to be involved, that's what you're looking for as far as your highest risk area to get your greatest amount of return. And as we get our opening bell, 74.95 the open, we know where our gap is. And like I shared, your 75.30 is where FOMO is. We talked about this on Wednesday. Your trade of the week, I'll show you in a second, plus 100% full credit. 100% on your money. 943 comes in, 948 as the FOMO starts kicking in. And I'll bring you on to a 1-minute chart just so that you can see it in your own real time. As we went, you know what? I'll give you my 0 DTE chart. As we went right up into that FOMO 75.30, 75.35 area, we hung around there until around 10:15, 10:16, and the wheels came off the bus. How did the wheels come off the bus? Well, it's because the NASDAQ isn't what it used to be. So your $3 credit, $2 risk, so 150% on your money. That's the kind of thing that I look for. So anyway, to get to this, because it is a half-year review, June was absolutely spectacular. June was back to normal. That's what I mean by normal. It was back to normal the month of June. One failure, bam, $2.50 credit, didn't work, all-time highs. Yes, you could have rolled the trade. However, I never said to anybody, roll this trade out to tomorrow. Roll this trade out to next week. Never mentioned it, so I can't say that it worked. Other trades that we've rolled, like over here on June 15th, full credit. But then you come back over there to that Friday, June 18th, right after the FOMC meeting and the Fibonacci spiral date. And I went out there for 74.25, 74.20, looking that we were going to fill the gap back there from the FOMC meeting after we had gapped up, and it failed. 50-cent failure, could have gotten $4.50 credit, did not work. Back to normal, the way I looked at the entire month of June, credits were paying off big. So, for the half-year review, I've given 239 alerts. 194 wins, 45 losses. It's an 81% win ratio. 46,018 in total credit received. 9,675 in total losses. This takes you to a total of 36,343 for the first half of the year. Now, beginning of the year, the first quarter, January to March, gangbusters. 89.92% win ratio, could not miss. Couldn't miss. And then I got hit with that ceasefire, not the ceasefire being bearish, ceasefire looking for failure, and then the never experienced in 30 years. That rally that we had there in the memory chips that were just sucking the QQQ up, which was sucking the SPX up. And yeah, I got hit there during the month of May. It was a green month, but it was the worst month I've ever had, ever in my history of trading, that month of May, despite it being green, but it hurt my stats. 78 wins, 32 losses out of the 110 trades taken over the course of that. Call it a quarter because the end of the half is right there on July 2. But a 71% win ratio, 30% loss ratio, where the bulk and majority of that all came right there in that second half of April, early, or call it first 3 weeks of May, really is where I got hit. But the credit still worked out. You only made $10,000, $11,000 credit per contract over these 3 months, but you start multiplying that out over the course of the year. 36,343 perfectly followed. That's the credit received. So if you only got half of that amount, you're looking at 18,172. If you took 2 contracts, you're only getting 36,343. If you took 3, you only made 54,515. 5, you only made 90 grand. 10, you only made 181 grand. 20, you only made 363,000. 50, you only bought a house on the intercoastal. 100, 200, now you're starting to make different changes in your life because now you're starting to move into the right direction where you're not looking to buy shiny objects. Now you're looking to buy peace. Buying yourself a gorgeous home where you plan to stay for the next 30, 40 years and be totally happy with. Buying peace. Buying time. That's what this is all about. And despite 125 of these 239 trades issued this year going full credit, because I need to take into consideration when I put these trades out somebody that has a job that can't watch the market. They're trading off their cell phone. They can put in a trade with a limit order, but they can't go in there and monitor the trade during the course of the day. So I have to find something that I'm very, very confident is going to wind up full credit. And there you go, 52%. But as far as for the year, which isn't a spectacular number by any means, but starting out with $500 at the very beginning of the year, you're not only at $36,343 following the trades how they were, but you're up 7,268% on your money. So it's not great, it's not bad, but this is what's bad. I got to get this website fixed. So anybody who, I got WordPress is what I've been using, but anybody who wants to help, send me a message. More than happy to entertain the idea because I know the layout I want, but I don't want to shut down doing what I do because like I just shared for you guys over there in your spread room, in your futures room, I will pull that up in a second. Not one, that one. Here we go, and we head over into the futures room because, like I shared, longs start closing in on your stops because here you go. You are right up there, pushing onto that NQ 29,995, and you've had an amazing bounce after breaking down below 29,400 yesterday. You want to start taking this trade off. You got your 500-point bounce to the upside. You want to start taking the trade off. It's the holidays. Take your money. 500 points, one contract, NQ. That's 10 grand. Take your money. Don't be a greedy bastard. Enjoy your holiday. Enjoy your 4th of July. Enjoy the second half of 2026 because I'm going to bring it.